We welcome in Keith Fitz-Gerald, principal of the Fitz-Gerald Group, talking about the market here. And are you looking at S&P 7,000?
Yes, I am. And no, that's not a typo, believe it or not. I think if the wild cards stay off the table, Nicole, we are more than capable of achieving that. If anything, there's this nagging feeling in the back of my brain that that might actually prove to be conservative.
So what will drive us to these new levels, to new highs? How do we get there?
Well, there's four things that we refer to as this is a still market, as in many people still don't believe this is happening. There is still a lot of money on the sidelines. Many institutions are still on the wrong side of the trade. And finally, the Fed has still not begun to cut. All of which means, short way of saying, there's a lot of money that is still looking for a home. And we're seeing that in this earnings season. The great companies are still putting up solid numbers, and that's attracting capital. Over time, that innovation never, ever ceases to produce profits.
And so at this point, when you look at earnings season and what you're hearing thus far, do you like what you're hearing thus far?
Very much so. Now, there is very much so because, well, and Palantir stands out. JPMorgan stands out. Today we saw McDonald's, which I didn't think could do it, stood out because they're really beginning to refocus. And so we've had for several years, really since COVID, where people just threw things against a wall to see what would happen. We entered uncharted territory. But the companies that doubled down, that focused on AI, that focused on digital investing have done very well for investors. And those are the kinds of companies that we tend to focus very intently on because those are the ones that are going to continue to succeed despite it all.
So I think about the stock picking that needs to go into a portfolio when we're going to be seeing higher highs. How do you go about picking these stocks in the current environment? I'm sure you expect some volatility, but what stocks could work in a portfolio that's heading higher for the most part?
Well, we actually expect a lot of volatility, and that's exactly the opportunity. It's a very simple distinction in my world. Either you go after companies that are making must-have products that the world can't live without, which are vastly higher probability for future profit potential, or you go to the nice-to-haves because maybe you just are comfortable with it. An idea, for example, Apple is a must-have company. The world cannot live without what it makes. Peloton, you know what? There's lots of different choices for exercise bikes. So it's a nice to have. So as long as you can, as an investor, just take a deep breath, figure out what you must have, what the world must have. The decision gets down to very simple nuts and bolts.
So when I think about the different names, I mean, is there anything you would stay away from?
Well, you know, that's an entirely different question. There's a lot I would stay away from right now. For example, you know, many of the industrial names are struggling because they still didn't factor in tariffs, or they're still struggling with margins. I would stay away from, contrary to your prior guest, I would stay away from Boeing, for example, because it hasn't got its culture sorted out. And so, you know, airlines themselves are not in a good spot, but, you know, the equipment itself is not going to be if they're not buying. So, you know, those are things that we think about daily because what I want to do is play to win. I'm not so focused on what not losing, which is what everybody else does. I want to win, so I want to go out of my way to find those value proposition companies with 0 to 1 catalysts that can change the world.
I mean, Mag 7, when people ask you about the Mag 7, what do you tell them?
Well, not every tech is the same. And even within the Mag 7, they're not the same. So, you know, you can't paint Facebook with the same brush that you paint Apple, that you paint, you know, any of the other Mag 7 together. You know, Google, for example, I think is a tremendously conflicted company right now. Amazon, too. So even within the Mag 7, you got to draw your distinctions based on what is important to you. And important to me is winning and focused on where is this thing going, not all the legal challenges, the headwinds, the failure of search. You know, those are big, big sweeping issues that I don't think investors are recognizing yet.
When you look to buy the best, ignore the rest, I mean, you're really looking for quality and I guess some value as well. Do you look to, you know, you mentioned names like Palantir and things like that. Does that go into a best category? I saw JPMorgan, Walmart. Any of these names like that you like for the long term, or is it dividend aristocrats, or what was it?
Well, we have a diversified portfolio in terms of what sectors we're using, but we don't think about the world in sort of traditional slicing and dicing. We think about the world in terms of who's got great liquidity, who's got a 0 to 1 catalyst, regardless of industry, and who makes must-have products that the world can't live without. And when we start lining those variables up, it becomes a very different picture. So Palantir, yes, long-term hold. I probably don't own enough shares. Tesla, for example, as conflicted as that is, that's a long-term hold in my book because it's changing the world. It's not about cars any more than Amazon's about books today. So these are, again, when I'm thinking best not rest, it's a very, very select, very focused list in my world.
Do you find that Fed policy may go your way? What do you think?
Well, that's a loaded question in my book because I think the Fed's policies are so far off the mark that it's not even funny. They missed the crisis, they missed transitory, they missed hanging on too long. They've got busted models. They're not stupid, but they're a very, very challenged organization on a lot of different levels right now. So the only reason I look at the Fed is because I wonder what traders are going to think about what everybody else thinks about the Fed, not because I care what the Fed itself is going to do.
Keith Fitz-Gerald, S&P 7,000. A friend of mine has some hats here that say S&P 7,000. He's on your page, Peter Tuchman. So, on that day, maybe come down here. You can wear a hat.
That would be an honor. Thank you so much.
Yeah, come anytime. Keith Fitz-Gerald, principal of the Fitz-Gerald Group. Thank you.